Start day trading today. Strategy that actually works. If you have ever looked at a chart and wondered, how do traders know where to enter? What makes them confident enough to act while everyone else is hesitating? You are not alone. This is one of the most common challenges for new traders. The truth is, successful day traders are not guessing. They are not rolling the dice or relying on luck. They follow a clear, proven process rooted in structure, logic, and repetition. While most beginners are chasing every green candle or reacting to the latest news headline, the traders who make money consistently are focused on one thing: execution, based on a plan. Tired of getting stopped out or always being late to trades? Today, I will show you a day trading strategy that actually works. No indicators, no expensive tools, just pure price action you can use right now. Like the video and subscribe for more real trading strategies. Let's dive in. Before you ever place a trade, you need a map. That map is market structure. Price action is not random. Every move the market makes is part of a bigger pattern. Most people zoom in too close and get caught in the noise, but professionals zoom out first. They look at the bigger picture and ask, where are we in the overall trend? In this chart, it is clear. We are in an uptrend with a sequence of higher highs and higher lows. That means one thing: you only look for buying opportunities. Trying to sell in this kind of environment is like stepping in front of a moving train. Every time price pulls back, it respects previous resistance that now acts as support. And that is exactly where smart traders get in. Mark those key levels because they are not random. These zones represent areas where the market has reacted before, where big money made decisions. Notice how price consistently pulls back into those areas before continuing higher. That is your confirmation. But it does not stop there. Look at how price behaves at those levels: sharp rejections, long wicks, and sudden volume spikes. That is the story unfolding in real time. When you combine this behavior with trend context, you no longer chase the market. You plan your trades with structure and logic. This is your map. And now you know how to read it. Most traders fail not because of effort, but because they trade without a true edge. They chase price, enter too early, or rely on indicators that give no real context. Real setups are different. They are built on structure, confirmation, and timing. Every move has a reason. Every entry has logic behind it. This chart shows a clean transition from a downtrend to an uptrend. A setup that builds step by step, with rejection, confirmation, and a low-risk entry backed by price action. Here's how a real edge forms, broken down into 5 key stages. 1. Trend context, spotting the shift. At the far left, the market is clearly in a downtrend. You can see the red trend line sloping downward, showing lower highs and lower lows. Momentum is bearish, but then something changes. The price starts to stall around a significant zone, marked by the yellow support area. This is a key level where buyers previously stepped in, and they're doing it again. This is our first clue: rejection and accumulation. Notice how price tests this support level multiple times. Each time it does, we get long wicks and sharp rejections, circled in blue. This shows absorption. Sellers are pushing down, but buyers are soaking up the pressure. This is not just a random bounce. This is accumulation. Smart money is preparing something. Still, there's no trade yet. We're waiting for confirmation. 3. Break of structure, your first signal. Then comes the break of structure, clearly marked by the green line and labeled on the chart. Why is this important? Because for the first time, the price breaks above a previous lower high. That's not normal behavior in a downtrend. It means something has changed. This break is your first real edge, a clue that the market is ready to flip from bearish to bullish. 4. Higher high, the confirmation. After the break, price pulls back but doesn't go lower. Instead, it creates a higher high. That's your confirmation that we're in a new phase. The market is no longer making lower lows. It is making higher highs and higher lows, a textbook early stage uptrend. This structure gives you confidence. The trend has flipped, and you're now aligned with new momentum. Shot 5, the entry, precise timing with context. Here's where real edge comes in, the entry. Rather than chasing the breakout, you wait for price to retest the structure it just broke. Look closely. It touches the green line again, exactly where the previous resistance was. This is now support. This is your low-risk, high-reward entry point, exactly where professionals strike. The green arrow shows the explosion that follows. Clean, strong, impulsive move upward. That's what happens when you wait for structure to flip and time it right. Conclusion: why this setup has real edge. Rejection from key support, smart money signs. Break of structure, first bullish clue. Higher high, confirmation of trend change. Retest entry, low risk, maximum reward. This is not guessing. This is structured, logical trading backed by price action and timing. That's the kind of edge you want in every setup.